In this video, traders, we're going to use the engulfing candle pattern to find high probability trade entries. Very powerful. Stay tuned. Hey traders, a very warm welcome to you. If you are a subscriber, thank you for your support. If you're new here, a warm welcome to you. Okay, so this channel is all about trading strategies, how to become a better trader, all that good stuff. This is a pretty powerful trade setup, trade strategy, however you want to call it. It utilizes two of the best things I think in trading, puts them together to present to you really good trading ideas. So what are we looking for? Very quickly, this isn't a video about what is an engulfing candle. I've done another video on that and gone into some more depth. But just as a reminder, guys, engulfing basically means if we're bullish engulfing, it just means that the body of the next candle has engulfed the high and the low. So it's higher than the prior high, it's lower than the lower low of the previous day. So that example there, that's your bullish engulfing. Flip it around for bearish. The idea is that it's a change in sentiment. It's actually gone lower the next day because you've got that lower low, and then it's gone all the way up and taken out the prior day's high. So it's taken out the low and the high, but closed on the high. That's the beauty of it, is the change in sentiment that you're after. So that's why it's so powerful. Let's look at how we can integrate it with an existing kind of good sound strategy to give that strategy a double whammy, to add another layer of edge to it, another reason for us to pull the trigger, other reasons to get more aggressive, to stick more chips on the table. All right, first things first, we're going to isolate the trend. Ways we can do this: we can use an ADX, we can use X period high, 20-day high, we can use a distance from a moving average, we can use a distance between two moving averages, MACD, RSI. I'll leave that up to you. Or you can just use Mark 1 eyeball. You can literally say, hey, you know what? This has been an uptrend. You know what an uptrend looks like. We don't need to go on with that. Isolate the trend. Looking to work within the trend. If it's an uptrend, looking for longs. If it's a downtrend, looking for shorts. That's the first part of it. Second part, wait for the pullback. We've got the trend now. We wait for the pullback. The pullback is a move against the trend. We don't want that too deep. We want it very shallow, reasonable off the high, not starting to look in the lower half of the trend. We don't want that. We want a nice steady pullback. You know what that looks like, guys. Nice push up, pullback. We see them all day, every day if we're trading. Now, what we're always trying to do with these is we're always trying to buy a pullback. Okay, we've gone through, I've done videos before, we've talked to different strategies of buying the pullback, whether we're using wicks, whether we're using kind of trend lines, moving averages, because that really is what we're trying to do in traders. We're looking to identify the trend and then get on board the trend, and a pullback is a good way of getting on board the trend. And everyone says, oh, just buy the pullback, buy the pullback. Yeah, but what about actual actionable strategy for it? That's what we're here for on this channel, to give actionable strategies for doing it. They might not work for you exactly, but they're going to be suitable so you can tweak and adjust depending on your time frame, the market you're trading, that kind of stuff. So this is actually an actionable thing you can look for. Uptrend, pullback, part one, part two. Now we wait for the bullish engulfing candle. In the case of an uptrend, it's bullish engulfing. Obviously, we're flipping everything if we're looking at a downtrend. We wait for that. As soon as we get that, it's great, because we have, number one, the good move up, the strength. We see the demand coming in, the speed, supply, demand imbalance. Bang, there's demand. A little bit of supply coming in. That's fine. Natural waves, natural backfilling. But then very, very quickly, sentiment shifts from that candle to that candle. Takes out the low, bang, rips through the highs, closes at highs. Bullish engulfing here, we're buying here, we're long there, our stop is under the low. Very nice trade because it can quantify it. As you guys know, if you've watched any more of my videos, I love to see strategies where we can quantify the risk. Yeah, that to me is one of the biggest things. I have to see that. If I'm a bit flaky about, oh, could go here, I don't like it as much. I like the ones that's very obvious. There, your stop goes below the low. If you want to be more aggressive, sure, go for 50% of the move. Or you can play around with it how you see fit and how you like to trade. But that really is the good way of doing it. Stop there, long there. And of course, your target is going to be, first target is going to be a breakout of that high. If it's brutally strong, you're probably going to wait for a breakout. You might even add more to the position on the breakout and look for a further move up. If you think it's like 3 or 4 moves up and it's a little bit not quite as sweet as you'd like it, maybe that's going to be an opportunity for you to take the trade off. Quick scalp, quick decent risk reward, and done. The important thing here, guys, is that you've got two powerful things. One, trend. We know how powerful a trend is. If we align ourselves with the trend, we're all good. Two, we've waited for the pullback. That's what we need to do with trends. Chasing them can work, but historically speaking, you can get caught out of that unless you've got the pockets and you're looking at a longer time frame. You can sit through these pullbacks. I prefer to do this kind of thing, see the trend, see the pullback, then wait for the trigger. And the trigger is this big engulfing candle. If you don't get it, you don't take it. You know, if you get a normal kind of candle that's sort of a bit half-hearted and chugs up, you just don't take it. The reason you take this one is because it is good, it's solid, it's a quick change in sentiment, and it's giving you a clear signal, hey, demand has stepped back up in here, and my assumption is that demand is going to continue and push this thing higher because the trend is behind it. I've proven it on a short-term trigger. I'm going to join that flow and I'm going to look for it. And if it doesn't, I've still got my stop there. It's not too bad. It's the range of that candle. Yes, that might be quite wide, relatively speaking, but it is what it is. You know that if it's going to break that low, the thesis is incorrect. The supply-demand imbalance hasn't shifted, and we're unlikely to be as aggressive to the upside as we'd hoped. So anyway, guys, that's using the engulfing candle pattern, a good pattern on its own, wherever you kind of put it. Other types of strategies within the uptrending environment to buy, or to time, should I say, that pullback buy. Thumbs up if you like this kind of stuff. See you next one. Take care. Keep the risk managed. Goodbye.